a complete guide to investing and trading in the stock market. To gain stock market knowledge and navigate investing and trading effectively, there are several key areas to focus on. Here's a guide to what you need to learn and the different types of investment and trading options available. 1. Key concepts you need to learn. Basic concepts: stocks, equities, shares in a company that represent ownership. Bonds, debt securities issued by companies or governments that pay interest. Dividends, periodic payments made by companies to their shareholders. Capital gains, profit from selling an asset, like stocks, for more than you paid for it. Investment and trading strategies. Long-term versus short-term. Understand the difference between holding investments for years, long-term, and trying to profit from short-term price movements, short-term. Risk management. Learning how to assess and manage risk, including diversification, spreading investments across different asset classes or sectors. Fundamental analysis. Evaluating a company's financial health, earnings reports, revenue growth, industry position, etc. Technical analysis. Using historical price movements and charts to predict future market trends. Market sentiment. Understanding how news, social media, and global events impact stock prices. Types of financial market stock exchanges, where stocks are bought and sold, such as the NYSE, NASDAQ, and others. Over-the-counter, OTC, markets. Stocks not listed on traditional exchanges, usually smaller companies. Financial statements. Understanding key financial documents like balance sheets, income statements, and cash flow statements. Types of investments in the stock market. Common stock. Shareholders have voting rights and may receive dividends, though dividends are not guaranteed. Preferred stock. Shareholders don't have voting rights, but receive dividends before common stockholders. 2. Bonds. Bonds can be purchased from corporations or governments as an alternative to stocks. These are typically lower risk but offer lower returns. Government bonds, issued by national governments. Corporate bonds, issued by corporations. 3. Mutual funds, investment pools that combine money from many investors to buy a diversified portfolio of stocks, bonds, or other securities. Managed by professional managers. 4. Exchange-traded funds, ETFs. Similar to mutual funds but traded on exchanges like individual stocks. ETFs offer diversification but can be traded throughout the day. 5. Real estate investment trusts, REITs. Invest in real estate or real estate-related assets, allowing you to earn income through property ownership or real estate development without owning physical property. 3 types of trading day. Trading involves buying and selling stocks within the same trading day. The goal is to capitalize on small price movements. Key skills: technical analysis, speed, and ability to handle volatility. Swing trading, holding stocks for a few days to weeks, trying to profit from short to medium-term price movements. 2. Key skills: technical analysis, market trends, and momentum. Position trading. 1. Longer-term trading, where you hold positions for weeks to months, often based on fundamentals rather than just technical analysis. 2. Key skills: market trend analysis and patience. Scalping. 1. A very short-term strategy focused on making small profits from tiny price changes, often entering and exiting trades within minutes or even seconds. Key skills: speed and execution with quick decision-making abilities. Options trading involves buying and selling options contracts, giving you the right to buy or sell stocks at a certain price before a specified expiration date. Key skills: advanced strategies, risk management, and understanding of implied volatility. Margin trading, borrowing money from a broker to trade stocks. This amplifies both potential profits and potential losses. Key skills: risk management, margin calls, and understanding leverage. Algorithmic or quantitative trading involves using computer algorithms to execute trades based on preset criteria, often involving large volumes of data. Key skills: coding, statistical analysis, and mathematical modeling. 4. Risk management in stock market diversification, spreading investments across different asset classes or industries to reduce risk. Stop-loss orders, automatic orders to sell a security when it reaches a certain price to prevent excessive losses. Position sizing, deciding how much to invest in each trade to manage risk appropriately. 5. How to start learning books. Read foundational books like The Intelligent Investor by Benjamin Graham, A Random Walk Down Wall Street by Burton G. Malkiel, and Market Wizards by Jack Schwager by Jack Yet. Online courses. Platforms like Coursera, Udemy, and Khan Academy offer courses on finance, investing, and stock market basics. Simulated trading. Use platforms like Investopedia's stock simulator or paper trading features on brokerage apps to practice without real money. Stay updated. Follow financial news, reports, and analysis regularly. You can choose the type of investing or trading that suits your risk tolerance, time commitment, and financial goals. For someone just starting, it's usually a good idea to focus on long-term investing with diversification, before getting into more active trading methods like day trading or options trading. Like, share, and subscribe for next videos.